Today, Hong Kong is holding up, but for the week, it's been an over 2% kind of cut.
21,100 is the level which kind of we put out at the start of the week as well, Monday and Tuesday. So that still remains the level on the upside.
Just cut paste the October. No change in rates and stance being withdrawal of accommodation.
But now the news is that they've asked mills not to use sugarcane juice only for ethanol output for 2023 and 2024. In the green for the Nifty, hanging on to 20,900. In fact, just within kissing distance of the 21,000 mark.
Intrinsically positive about the domestic investment cycle and the domestic economic cycle.
The policy repo rate unchanged at 6.5%.
And this Friday, last day of the week, we've hit a new high, which is 21,000 on the Nifty. It's come.
Large block, 12.5% equity got changed hands in GMR airports today.
Objective of the government, if it was to reduce price prior to election, we would have come, walked hand in hand with that objective. This manner is what hurts.
Okay.
Is there any fear that this money is going there?
Whatever was in our mind, we have spelled out.
Mid caps are definitely taking a day off today, so it's around 0.6% lower.
Well, that is the journey. 21,000 finally earlier today. And from there, of course, there has been a bit of a pullback which has happened. But in the larger scheme of things, I think the journey, as you see, has been unstoppable all the way, of course, from the recent lows. And it's actually recent, the 2020 lows of 8,000 something Nifty to where we are today, which is basically knocking at 21,000. Not knocking, actually. Entered and beyond the 21,000 mark. It's remarkable. You're with us here on Closing Bell. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Nigel join in as well. Guys, hi. Afternoon.
Hi, afternoon. The day may be a bit disappointing considering we started off at 21,000 and we've slipped about 100 points from the day's high, but it's been a historic week for the markets.
Absolutely. It's been a historic week. And, the first 3 days were truly, truly something. And the last 2 days, that today included, it's been a bit of a pause. Nothing else. Yesterday, the market ended lower. The Nifty was down, but barely. And today, it's not even down. It's up about 4 points or so. So frontline indices are flat, but profit-taking in mid-caps and small-caps. That, I think, is coming through clearly. But even there, if you look at the small-cap index, it's come off the lows. It was down almost about 1.7, 1.8%. The last I checked, there'd been some pullback there. The Nifty briefly broke below the 20,887 level. We're still trading around that one. That's basically nothing but the 20-hour moving average. It's now just about 10 points above that one level. The next support, if this were to go, is the 40-hourly average, which is 20,650. So which is about 300 points lower from here. The idea is, up and up kind of a market to stay long. But if you're trading and if you want to get in, the idea should be to try and, get the best possible price. So buy close to the averages, as close as possible to the averages. So you're closer to the first one. It's a Friday. Global markets will be trading, et cetera, maybe a little lower from where we are, and then perhaps it makes sense to get in once again. Will we go all the way to 2650? Because that is some distance away. The moves have been so sharp. I'm not sure, but the closer to it, the better. Bank Nifty low yesterday was 46,507, and that remains unbroken. And the index is trading absolutely flat as well. So once again, in a bit of a holding pattern kind of zone, post the sell-off from the 21,000 level early on. Reema.
Hi, today we're going to get the jobs number out of the United States, and if the number is a red-hot number, that could perhaps be a bit of a dampener to the buoyant global market. But back to our own market. So intraday, we've seen a fall of about 100 points from the day's high. The Nifty started at 21,000 and now is at 20,900. So there has been a bit of a fall as the days progress, but it's been a historic week. We started the week with the market scaling all-time high levels, and today even the 21,000 mark was taken out. Week to date, the Nifty seen a rally of close to about 3%, though the rally has been led by large caps because the mid-cap index, small-cap index have not performed relatively as well as the large cap. So the small-cap index, week to date, has had a gain of close to about just 0.5%. Banks continue with their up move. The Nifty Bank outperforms yet again. It's up 0.3% at a time when the sensex and the Nifty are absolutely flat. Week to date, the Nifty Bank is up nearly 5% with names like State Bank of India, ICICI Bank, HDFC Bank, all clocking in gains of close to about 6%. But that's about the front line, right? Outside of, the index and the large cap, sugar is a pocket which is melting right now.
Absolutely, Rima. And this has come out of nowhere, right? There were a lot of hopes that were pinned on this, and this has come out of syllabus. So that's a bit of an issue. And in that run-up to the show as well, we heard Balrampur Chini management said the manner in which it's done is something that's hurting them.
Advance notice would have helped.
Yeah, some kind of, coming on the table and in fact trying to work out something, that would be something that they would have desired. But how do you position yourself, though, in the final hour of trade? Mitesh Thakkar joins us to help us out with exactly that. Hi, Mitesh. Good afternoon. Thanks so much for joining in. What's your view on today's trading action, and do you have a couple of picks for us?
Afternoon, Nigel. So I think there's first sign of some profit booking happening on the indices. I think, the momentum indicators, which were still rising and were slightly overbought, I think are now just curving towards turning flat. So what I'm saying is that it's the hourly and the 2-hourly chart, which means that we could possibly now see some consolidation at higher levels. It is not a sign of a reversal as yet because the daily and the weekly charts still remain very strong. But yeah, I think, after a good gain, I think market at new highs, making a base is not a bad activity. But next couple of days could be sluggish compared to the last 3-4 sessions post the election. And I think on Friday, I think the move started and then it continued post the election results. So I think next couple of days could be more of consolidation. So the idea should be to buy on declines. On the stock side, I have one buy and one sell. HCL Tech is on the buying side buy list. That's a buy with a stop at 1340 for targets of 1405. Ashok Leyland, that's a stock which is now showing signs of a correction. So sell here with a stop at about 176.25 for targets of 170.
All right, Mitesh, thanks very much for that. We'll keep coming back to you for more. But let's focus on a stock which is powering away, even in a market which is not doing very much, which is flat. GMR Airports is what we're talking about. There was a big block deal earlier this morning, and we reported exclusively that the buyer is none other than GQG, which, of course, has recently been in focus after all of the, talk about the big gains that they've made in the Adani Group stocks. Nimesh, of course, broke that story. He's with us with more. Nimesh, take it away.
Hi, Prashant. So as you rightly pointed out, in terms of buyer entity, I understand GQG is the largest buyer in that block of nearly 12.5%. So let me just clarify, GQG is not the only buyer, but one of the largest buyers. And including and apart from GQG, there could be a few large HNI, large FIs as well who could come as buyers in that block deal. So that's the clarity that GQG is the largest buyer in that block. In terms of seller, while there is a lot of speculation about the promoter entity selling, that's not the case. The non-promoter entities have sold nearly 20.5% stake in GMR Airports today. If you look at the shareholding pattern, there are few FI funds who own close to around 14-15% stake. So among those funds, 12.5% stake got sold in a deal worth for close to 4,500 crores. So it's a large commitment that GQG has made in GMR Airports now. As we all know that GQG has been a big investor in the Adani Group stocks, and largely they've been focusing on the infra name, so to speak. Now this is the first company where they've bought into the airports business as well of GMR. So big commitment from GQG, but as I said, this is what I've understood from sources, that the non-promoter entity was a seller in today's block deal in GMR Airports, and one of the largest buyer was GQG.
Okay, so let's find out what is it about GMR Airports which may have attracted GQG Capital. Vivek joins in to tell us a little bit more about what GMR Airports does, what all are the assets that it owns, the main areas of focus. Vivek.
Well, absolutely right. This is a very interesting development. So what we're actually looking at this point of time is what exactly is GMR Airports and what is it that they operate as far as the Indian operations. As remember, they also have some overseas assets. Number one of the largest airports in the world, and along with that, one of the airports that has the maximum amount of passenger movement. So Delhi airports, that is run and operated by GMR Airports, the Hyderabad Airport, the Andhra Pradesh Bhogapuram Airport, the Nagpur Airport, as well as the Goa Mopa Airport. All of these airports in India are run by the GMR Group. As far as, their overseas assets are concerned, they run airports in Indonesia, Philippines, as well as Greece. So what was the problem with GMR? Why has the stock been a perennial underperformer? One of the biggest issues that was plaguing the company was a high debt. So in 2021, the company actually did a rights issue, and the French company Group ADP actually participated in this rights issue. However, post this particular rights issue, while the company managed to right-size its debt, what actually happened was that the corporate structure became quite complicated because Group ADP from France actually wanted exposure only to the airports business of the company. So in this particular fiscal year, the company has decided to go ahead and further simplify its corporate structure. So there will be one listed entity which will be called GMR Airports Infrastructure Limited, which will operate all of the GMR airports in that particular structure, and the company hopes to go ahead and consummate this particular merger or corporate simplification by the end of this fiscal itself. GMR Group will continue to be the majority shareholder, owning more than 33.5%. Group ADP will hold more than 32%, and the public holding will be 34%, of which now you will see GQG Group have some significant stake as well.
Vivek, I believe, Nimesh, go ahead.
Okay, Vivek, if I can ask you, broadly, if I want to understand the revenue model for the airports business, what is the kind of revenue model? Because I believe there is a aero revenue as well as a non-aero revenue. Broadly, if you can tell us for the viewers how GMR makes money in the airports business.
Well, one aspect of this particular business is the regulated aero revenue business. Right. And this particular business is actually regulated in terms of the tariff that they have with the state government. So one of the aspects or one of the problems that the company faced was they actually had a bit of a tiff with the Delhi government in terms of having the ability to go ahead and hike revenues, which gives them an immediate uptick in terms of the revenue visibility. The other aspect that they have is in terms of rental revenues that they get as well as passengers spend in the airport, of which they get a significant amount of chunk as well. So these three broadly, you can classify as the key revenue streams for the company.
Because why I asked you is because I was reading a Kotak report, and the Kotak note very clearly says that going forward, it's the non-aero revenues which is going to make a big difference for this airport businesses. So any numbers that you've worked out on how big could be the non-aero revenues for GMR?
Not yet, but we'll have a quick look at it as well. Okay, sure. Have a couple of reports handy. Okay. Just do a bit of math over there.
Got it. Prashant, just want to add a line on GMR airports. I mean, we broke the story. Vivek explained in detail as to what the revenue model could be. From a technical perspective, I just got a feedback from a technical analyst that the stock now is above the 14-year breakout. The last time, 65 was a big resistance and a big level to watch. I think that's crossed in today's trade. So even from a technical perspective, the stock is now has broken out the 14-year chart and that's the reason why you've seen a lot of excitement as well after the news that we broke today.
No, absolutely. I mean, a lot of things happening for it. And as we were discussing earlier, Nimesh, I mean, if you want to play the booming air travel, it's either airlines or airports. And in airports, as you've been telling us, there's only one listed entity, which is GMR Airports. So there are, that's getting its due at least today with the gains we are seeing. Actually, my colleague Yash sat down with the GMR, CFO, Chief Financial Officer, on the outlook as they see for the GMR Airports business. Just a quick soundbite, and then we'll get in Prakash Devan for his thoughts.
The GMR Airports Limited is about 3,900 crores, which including the all interest accrued everything. That is what we are refinancing now. Trench 1 we have completed. There will be Trench 2 and Trench 3 also. We are likely to raise the Trench 2 and Trench 3 maybe in December and January. That will take our debt level maybe around 4,700 crore rupees, which includes our acquisition financing also. Okay. As far as interest rates are concerned, now the current rate of interest which we have offered is 13.275, which is much lower than the earlier rate of interest.
Massive volumes on that counter yet again. Prakash Devan joins us as well. Hi Prakash, good afternoon. What's your view on this one? GMR Infra, I remember it was at around 65 rupees. Everyone was quite bullish about it. We're getting to peak season. We have the World Cup as well. And suddenly that corrected. But today we understand that a large fund is getting in. How would you view the stock at around the 69 rupees odd?
Good afternoon, Nigel. So, of course, this was always an opportunity, but what exactly is the tipping point is usually difficult to make out, right? And, now all of us know the kind of assets that they sit on, the kind of revenue potential that they have. And I can tell you some of the real estate parcels that they have, particularly around AeroCity in Mumbai, in Delhi, and Mopa in Goa. It's absolutely mouth-watering in terms of the kind of reach that they can create, the kind of potential revenue streams that they can create. But having said that, let's look at what's happened to the company when it's split between GM Urban Infrastructure and GM Urban Infrastructure and the airports business. There are lots of questions related to how they would be able to consolidate the portfolio on the airports and grow from there on. So that is something which probably seems to have been done, most of it, and there could probably be about 20-25% work around that balance sheet consolidation. But it's not that the opportunity is running away and you probably miss out on that. So less people get FOMO on this. I can only tell you that this opportunity is far more secular in nature. The only other player being Adani Airports, which is still part of AEL, the Adani Enterprise stock. It's not been demerged, but at some point that will happen. So the trigger for this, if you were to buy it $69-70, is that you'll have to wait for that demerger to happen in Adani to kind of get itself the GMR Airport some sort of a valuation kicker. But otherwise, on dips, you could keep on adding to the portfolio. One of the best ways, as Prashant also said, to play the airport expansion business. But I still love the airlines. Indigo continues to be a favorite as a consumer and as an investor. And look at where it is kind of today. And if that's the case, they will also kind of benefit disproportionately as compared to some of the other players who are still struggling. So it's a call that you need to take. And then you can throw in DreamWorks into this. And there are lots of other airport associates, business allied to the airport business that comes in. But GMR, particularly, Nigel, is actually sitting on a cash cow, especially Delhi, which is already proven, Mopa, which is probably smaller scale, but will get proven, and of course, Hyderabad being one of their core assets. So between these assets, they have enough going for them, but then they are small in terms of scale as compared to the Adani piece. So we'll have to wait for that to kind of start seeing how this reacts eventually. But buy on dips, if you will, but not necessarily on a day like this when there's too much of exuberance around the block piece.
Got that. What about Praj Industries? Now, the stock has taken a hit of about 10% because of the curbs that the government has put on ethanol. But you know what? The management of Balrampur Chini was saying that perhaps this is going to be temporary. Maybe till the election tides over is what some of the analysts seem to suggest. So considering the fall may have happened in Praj Industries for factors which are transient right now, would you bet on Praj Industries considering you are getting a dip?
Absolutely, Rima. I'm so glad you took this up because, this is a reaction that's come in as if, all ethanol producing capabilities and capacities in the country are going to come to a standstill. It's not the case. What's going to happen is there's going to be a slight shift in stance from the government side. And as you said, and I do, remember listening to that interaction with Mr. Vivek Saraugi, that it's something which could probably not last too long. It's a 6-month window that probably is being put. It's a pause of sorts. But remember, the government would also encourage ethanol production from various other sources. It could be corn, it could be rice. There are lots of other mechanisms. And every time there's a new source that needs to get deployed or incorporated, Praj gets business, right? So what's going to happen is this ethanol story, the juggernaut that's on, is probably going to take a pause. New equipment, probably installation of new machinery and equipment might take a little bit of a backseat. But they have the order book. Look at the order book that Praj sits on. I don't think there's any question that they will not get business or continue to grow. In fact, you'll be surprised they're also working on a project where they'll get aviation turbine fuel made out of ethanol. So if that is the case, there's going to be very good value-added business that will come their way at some point or the other. So, this is a good opportunity to buy into a long-term story because it had run up to those 600, neighborhood very quickly. And this pause probably gives you that opportunity. And people could start looking at very differently on Monday itself once they realize how, strong the business can grow from it.
All right, Prakash, we have a lot of questions, but we have long commercial breaks today. So thank you very much for joining us. As always, it's a pleasure. Thanks indeed. And we'll speak again soon. The market, by the way, has moved up a little bit more. We're up about almost 40 points. Back at 20,940. And there you go. That's basically what's going on. From being absolutely flat, there is some buoyancy there. We'll take a quick commercial break here. Rupal Bhansali will be with us. She's Chief Investment Officer at Double Duty Money Management. She's with us here in our studios. So that conversation coming up next.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. The Nifty is holding above 20,900, but the mid-caps are correcting. The mid-cap index is down 0.5%. The small-cap index is a cut of more than 1%, 1.1% lower as we speak. And the advanced decline ratio is well in favor of the losing side. It's very much skewed towards the declining stocks. Rupal Bansali, the Chief Investment Officer at Double Duty Money Management, is with us now. She's also the author of the book Non-Consensus Investing. Rupal, I think the name says it all, right? Non-consensus investing. But right now, the mood across global markets is very buoyant. Whether it's Wall Street, in India, we've had a historic week with the Nifty scaling 21,000. What's the market construct for you for 2024?
Well, unfortunately, I'm quite bearish. I think we've borrowed from the future in terms of current returns. And so we are experiencing, obviously, as you pointed out, excellent returns all over the world. And much to everybody's surprise, because this was supposed to be a down year and turned out to be a banner year. I think the bad news is simply delayed, not denied. I think the bond markets in the US are flashing red in terms of a recession. And a US recession is bad news for the entire global economy. And I don't think any particular country or market will be immune to that gravitational force. So that's what bothers me a lot, that the markets are not paying attention to what can go wrong and only focusing on what has gone right.
I mean, markets are pricing in rate cuts next year, so there will be some slowdown. But most are saying it's going to be a slowdown, not a sharp recession or anything. What gives you the confidence that it will be a sharp, proper recession, which we've not had for more than a decade now?
So I think the challenge is that historically, when we've had recessions, we've not had a lot of debt alongside those recessions. And debt, causes people to take a lot of knee-jerk actions because that is a fixed liability. And so what would normally happen is you might have what I would call a mild recession. But if you have a lot of debt, it aggravates a pre-existing condition. Companies are forced to cut more than they normally would because their debt remains a fixed liability. So that's what bothers me, that the debt binge that we've had since the GFC, especially at a time when people were only focused on coverage ratios, which obviously when rates were close to zero, the debt service coverage ratio looked great. Mm-hmm. I think people will focus on leverage ratios. Ultimately, the debt has to be repaid. And that's kind of what I think the market is overlooking. And I think it would be well served to pay attention to it.
All right. Hi, Rupal. Good to have you in the studio. We are thumping the table. Most market voices say going to get a stable government. India's going to have double-digit earnings growth. And we believe things are looking up. But you have a cautious voice. At these levels, you believe the Indian markets are a little bit on the expensive side?
I think, again, the challenge is that while there's been a lot of good news, and in fact, great news, as you rightly point out, on so many vectors in India, you can't help yourself but be bullish. Mm-hmm. But I think markets tend to be forward-looking. And a lot of the data that you pointed out is pretty well flagged and well known. And I think it's more than in the price. And so what my attention is focused on is what is the market missing and therefore mispricing.
Okay, all right.
And just a follow-up, what's the market missing? What is, that it's mispricing right now?
So I think when fixed income is giving you 7% rates of interest in India and about 5.5% in the US, there used to be a time when people said T now, there is no alternative. I think now it is T on, there is an alternative and it's called fixed income. And I think equity markets have far more competition for their attraction than before. And clearly, I would say that as an investor, fixed income over fluctuating income.
Okay, let's focus on equities first. You're sounding a little bit cautious on the US markets because there could be a bit of a hard landing out there. Indian markets valuation-wise, maybe we're a little bit on the expensive side. But there must be a couple of global markets that you like. Which are the top of the pack?
So I think squarely, growth is overvalued everywhere in the world, but mostly so in US and India. Value is actually not as undervalued, believe it or not, because everything has gone up. So I'm actually not bullish on growth or value in the US market or even in the Indian market. But I think value in Europe and in Latin America looks very compelling. Europe has been essentially written off. But if you look at the Ukraine crisis, you look at how this continent has overcome a lot of adversity. I think it speaks to the resilience of this nation. And I think it's very underestimated. I like opportunities where the risk is priced in, the bad news is priced in, disappointment is priced in. And that's sort of true of Europe. You'd hardly find a person who's bullish on that region. And yet, you look at some of the companies, in that region. You look at L'Oreal in France. It's taken over P&G. in terms of the US market and global markets. You look at Michelin, which is a tire company. It is really overtaking sort of all the other tire companies in the world. I mean, these are companies that are blue chip companies trading on very attractive multiples, but they are overlooked because nobody wants to pay attention to this part of the world. And I think the euro is also very undervalued. People forget it's actually a large exporting region, and a current account surplus generally means an appreciating currency. In fact, the dollar, which has a current account deficit, has been an appreciating currency against the euro. I think that could reverse course as well.
What about China? I mean, you're talking about non-consensus. China is consensus bearish. And so,
I actually think that, look, we were bearish on China when everybody else was bullish. So I think this has come to pass. I think the property market sector, I mean, everybody knows it's going to be painful. But I think the one thing people forget is that a lot of the debt and the problems are going to be at the provincial government level. And I think ultimately the resolution will be that the federal government will simply take over that liability. This has happened in the US in the past. When the states were indebted, the federal government took it over. And the federal government in China is quite rich and strong. I mean, they have the wherewithal, they have the revenues, to support that. Secondarily, I think the real issue in China is the demographic. It's been a long time in the coming, but I think in the last 2 or 3 years, what has really shocked people, including myself, is that the birth rate has absolutely plummeted. And there seems to be some sort of structural change here. And that, I think, bodes very poorly for the long term. However, as countries like Japan have shown, Switzerland have shown, you can have economic growth without having population growth. You need to improve productivity. And I was recently in China just a few months ago, and I can tell you the Chinese companies are truly investing in technology, automation. It reminded me of when I would go to Japan, 15 years ago, 10 years ago, 20 years ago, when labor costs got expensive. And so I think people are underestimating the power of the industrial sector. Not the property sector, which has its issues, and again, I'm not denying that, but that'll be focused on the banking sector, the provincial government, etc. But if you look at the other sectors, there is opportunity. And AI, believe it or not, China is a humongous beneficiary, notwithstanding all these constraints on the semiconductor side, because in AI, data is the most valuable. And China has a lot of data because it went digital long before anybody else. And it collects a lot of the data. It collects end-to-end data because everything is, consummated from start to finish. And it's real-time data. That data is richer than just having data. So I think these are some of the things that people are overlooking. Now, admittedly, you have to be very curated in your exposure. But Baidu, which is one of the leaders in AI, and even Bill Gates, he was in China recently at the convention, said that Baidu and the Chinese companies are quite ahead of the game in AI relative to what I think people understand or appreciate. So these are the kinds of things that I'm excited about. When people don't pay attention to something, but there's a lot of positive stuff that could happen, but it's not in the price. Baidu, for example, trades on 10 times earnings. You don't have to pay up for it. It's a net cash company. So even if I'm wrong in my view, I won't lose a lot of money. But if I'm right in my view, I make a lot of money. I love that kind of risk reward.
Fair enough. So why broadly you're bearish on India? But are there individual themes, stocks that you find attractive?
Sadly, India is expensive across the board. I am hard-pressed to find a name that looks attractive relative to global opportunities. Within the Indian market, I'm sure, because money is tied up here for most investors, I understand. But genuinely, I think instead of focusing on equity markets within India, I would actually invest in fixed income.
We are waiting for the big flow of foreign money coming.
Believe it, I want to assure you that my view is definitely in the minority. A lot of people in America, a lot of my former clients and people that I've spoken to institutionally are excruciatingly bullish on India. And I use that word excruciatingly because they all acknowledge that India is a very expensive market. And I find that to be very striking. Everybody knows that this is sort of a big risk factor, and yet because the market keeps going up, people are sort of ignoring it. You ignore these things at your peril. I mean, this is what leads to big corrections.
But so all those people that you speak with, your colleagues, your peers, etc. And
no, institutional investors. I talk to pension plans.
So when
yes.
we're finishing 23, 24, allocations get decided, etc. I mean, just a sort of a feedback is, are they all
very positive on India, especially because The biggest concern in the markets globally, besides economics, is geopolitics. And the politics in India are so favorable for the Indian economy. Again, you just noted the Indian elections, the state elections, etc. Modi is clearly cementing his power. I think he's spending on infrastructure. I mean, it's well known. But I think that for the first time, I also think that what Modi has done for the country is instilled a sense of pride. I think that's something that is priceless. You can't explain it. America had what is called mojo, animal spirits, and all you had to do is sort of spark, provide a spark, and that's what we did after the GFC, and the rest is history. I think India is very much like that. So again, I don't want to suggest that one is bearish on India as a country or as a nation, but there's a big difference between paying up for the stock market versus being bullish, on other aspects of the country.
As well put, Rupal. We're out of time, so we're going to thank you here. Thank you very much for dropping by, and I hope this is the first of many interactions in your new avatar. So great to have you with us here. Thanks very much.
Having me. And Happy New Year.
You too.
Happy New Year. Well, that's Rupal Bansali with a quick take, global, local, everything. And so that's a very interesting perspective, non-consensus, as she herself put it. 60 points higher for now on the Nifty. We're at about 20,970. We'll take a quick commercial break here. There's more coming up on the other side. I think the last, 30 minutes of trade, 25 minutes of trade lined up.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, we've been mentioning all through the week, in every morning chat, I mentioned that the Nifty Bank is the one that appears it wants to go higher. The Nifty, you cannot short this index, and it appears that it has some unfinished business at higher levels. And as we speak, we're moving back to the high point of the day. The Nifty Bank, that's the one that's really picking up pace now, holding at 47,300. We're making a fresh high out here. Kotak Mahindra Bank, Axis Bank, ICICI Bank, they're the big movers. And the good news is HDFC Bank, that was actually year-to-date negative after many, many years, that's moved into the green. So HDFC Bank for the year now is up close to around 0.5%. Nimesh joins us to tell us what he's picking up in terms of D-Street action. Nimesh?
Hi, Nigel. While the markets have not turned to the day's high, but it's been a choppy day of trade again for second day running. But the flow seems to be quite strong. I'm saying this because the feedback was there was a basket buying in the morning trade at a leading FI desk, and that was largely in the private bank stocks. And also towards the end, there's going to be some MOC as well, which I mean market at close. But it's a mixed flow today, both buys and sells as well. So last 15-20 minutes, we see a bit of a volatility in some large names. But throughout the day, the feedback was there is buying interest from larger institutions. But the bigger pain point seems to be the broader markets. That's where we've seen some bit of profit booking now in the mid-cap index. The mid-cap index is down nearly 0.5% and has relatively underperformed. But it looks like even there, it's largely profit booking and some bit of Friday factor as well, which is playing out for some retail investors. As I said, it's the private banks which are well bid for second day running. So good amount of buying interest is back in the private bank stocks from larger FIs, and that's showing up in the Nifty Bank, which is up nearly 0.7%. So good day in terms of flows, but I guess the weakness in the broader markets is largely in profit booking and maybe because of the weekend factor.
Nimesh, the mid-cap index is now trying to get back in the green. About an hour back, as you said, it was down 0.5%. I think even 30 minutes back, it was down 0.5%. But now it's trimming those losses. And from the session lows, the mid-cap index has recovered 400 points. But what about stocks? What have you picked up?
So, Rima, in terms of individual names, the first stock on my list today is Reliance Infra. Marginally under pressure in today's trade, but off late that stock has been buzzing and large volumes as well. Looks like some HNI interest seems to be back on that stock. And from a news perspective, watch out for a large order win, as well as the company is looking to sell some non-core assets. So these are the few triggers to watch out as far as Reliance Infra is concerned. The second name is RBL Bank. I spoke about private banks being well bid. RBL stands out for past many days. The feedback is there is institutional interest back. Some bit of long only funds seems to be active buyer in RBL Bank, and hence a big outperformance in that stock of late. The third name is Apollo Tyres. That stock, yesterday we saw a sharp dip in the last half an hour of trade, but it's recovered from those lows. But again, it's been consolidating in a range. But I understand there's going to be a large block deal in Apollo Tyres very soon. That's been a strong buzz for the last couple of days. And the last one is Ashoka Buildcon. Again, this is one stock been largely range for the last many days and weeks now. But it looks like some bit of institutional interest is back. So expect high delivery volumes, and the feedback is some bit of FI interest is back in Ashoka Buildcon at these levels.
Okay, all right, Nimesh, thanks a lot for filling us in with all of that. Well, let's hop across to Mitesh Thakkar. Mitesh, just around 17 minutes and we're done for the week. Yippee. But what's the call that you have for us in terms of buy or sell calls?
Yeah, I have a BTST on ICICI Bank. Actually, it's the Bank Nifty which has managed to get past the highs of 47,200. Honestly, I wasn't expecting that. And, this breakout suggests that maybe the Bank Nifty will lead for the next few days. So ICICI Bank is a BTST with a stop at 1,005. The target of 1,025 can be looked at. The other one which I've been liking is HDFC Bank, which we had a buy call earlier as well. That's a BTST with a stop at about 1645 for targets of 1670.
Actually, today, both the big sectors are performing, banks and IT. The Nifty Bank is up 0.9%, while the IT index is up 1.3%. We'll slip into a very short break on that note. We'll come back with more on the markets and about 15 minutes left for us to wrap up the day and the week.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Well, that is a journey on the Nifty all the way to 21,000 earlier this morning today, and it's been an absolutely spectacular one-way kind of a ride. Well, sugar stocks, though, are not having such a nice ride. They are down. I mean, actually, as a bunch, they are down. This follows the decision, of course, of the government to restrict the use of cane juice to produce ethanol. We spoke with Vivek Saraogi, CMD of Balrampur Chini. They're one of the largest sugar mills, and this is his reaction to what the government has done. They feel that the main sort of channel through which sugar companies will get hurt is via lower sugar prices. In terms of, sugar, ethanol having higher profitability and, that in turn hurting, they think that is more manageable. Listen.
1.2 crore quintals of Balrampur, that's approximately less than 10% of my overall cane crush in 2 units was going to be used not to make a grain of sugar, but entirely going towards juice. The second part of the notification, which we read between the lines, is what has been tendered till now is what will be accepted. So there is no window for a fresh tender for B heavy also. But I'm sure that, we will represent, and maybe if you're not being able to make juice in a factory, right now you've been told to make C heavy, but I'm sure maybe government will recognize that to that extent, somebody who's not allowed to make juice in his unit can make B heavy in his unit. I hope. I think it's a move which is just aimed for 6 months. I said it could have been done in a much, much better fashion. The same objective could have been achieved in a far more graceful fashion without sort of ruffling feathers and hurting, sort of the environment and confidence of all concerned. Having said that, what is done has been done. So we will try our best to meet and understand, also give some measures, maybe, increase the C heavy price to compensate us, increase the B heavy price also to compensate us, because the quantum of tender has been curtailed. So we will come up with our ideas. We are, sort of making our representation. We will seek time. We'll go to the government.
In fact, my colleague Sapna Das is joining in. She caught up with the Food Secretary on government's move. Sapna, what are you picking up?
Well, both the food and the petroleum secretaries are on record in terms of, putting this entire development into context. So first, of course, the food secretary has mentioned very clearly that this is a temporary pause. In fact, the petroleum secretary also echoing the same view that this is a temporary pause, and the government will be doing a monthly review of the situation. We'll be looking at the sugarcane production numbers, and if required, there could be a tweaking. That is not being ruled out. So the current arrangement can be revisited, of course, depending on the data. It may just be likely that in the next month or by next mid-month, that review may be possible, in favor of the industry, so to speak. The second thing, of course, we need to put this in context is that there has been a worry in the government on falling sugarcane production. If you look at the first advanced estimates, that's what it reflects, plus the added impact of drought in Karnataka, unseasonal rains in Maharashtra. Both of them put together has squared the pitch, and hence the government is taking this decision. Third, of course, we need to highlight that only the existing orders of OMCs in terms of sourcing of ethanol from B-heavy molasses, those existing orders continue. The future orders will depend on what kind of review the government is doing. That's third. Fourth, of course, this brings us to the ethanol blending target. Well, the Petroleum Secretary is on record and extremely clear that nothing is diluting that. 15% for the current season for this year, 20% by FY26, that remains completely unchanged. And just to reiterate, this is a temporary pause, and government will revisit the decision depending on how the sugarcane production numbers pan out.
Okay, this is a temporary move. Maybe the government will rethink it depending on the way the situation plays out. Thank you very much for that clarification. The Nifty is trying to get back towards nearly the day's high. So we're off from the day's high by close to about 30 points. Mitesh is back with us now for a few closing comments. Mitesh, I know about a month back you were fairly bullish on many of these IT names, particularly large cap IT names. Today has been a good day for IT. Any particular stock that you like from current levels?
Yeah, I recommended HCL Tech earlier in the day. I think that's a stock, which one is showing very good traction on the long-term charts, and on an immediate basis also, the stock continues to make a new high. The other one which I like is LTIM. Again, it's managed to get past the highs and the congestion area of 5,600, 5,550, and today is trading beyond that. So I think these are the two names top of the list. Wipro is more of a trading buy. I don't think the long-term charts are good as yet, but yeah, from a trading point of view, you might want to trade Wipro as well.
Okay, there's about 4 minutes to go for close, and that's what's coming through. Just a quick view, since we have you, Mitesh. Praj House, it's in a big crack today. Technically, where does it find support?
See, I think that news flow, which was on the sugar stocks has affected the ethanol and the sugar making stocks both. Praj, I think, has given a big breakdown. The first support area is closer to 516, which is where the stock had closed on 26th of October in the last swing low. But I think the way the indicators are shaping up, good chance that we will actually see the stock break below that. And once 516 gives us away, I think good chance that we are seeing the stock, declining further to levels of 480 or thereabout. So negative view on the stock as of now.
You looked at the move in GMR, Mitesh. How is that one looking?
GMR, I think, very good. That after the block deal and negative opening, I think very good traction. Again, here is a stock which, when the long-term charts are very, very positively biased, and the stock has given a fresh breakout today. From a buying point of view, I would want to buy it closer to about 67, 66.5 with a stop below 64. And I think the stock is heading towards levels of around 74, 75 to begin with. Maybe even higher levels can be tested.
Okay, I think we've got about 3 minutes odd to close, and we'll pick up on how things are looking. Just these exchange names, Mitesh, IEX and MCX and BSE, as we close this week out. Again, I mean, generally has been strong, MCX and BSE, MCX maybe in the last 2 days, but how are these looking? Anything you like amongst the three?
Prashant, I've been liking all of them, but again, all these indices have seen so much of run-up that I don't want to buy them right now. It's just that you would want to see some pullback, some cool-off playing out before you want to buy them. So I think BSE and MCX both have kind of met and exceeded the targets on the upside. No reason they can't go further higher, but I think from a risk-reward equation, this is not the best entry point.
Okay. All right, Mitesh, thanks a lot for joining in and giving us all those details. And Prashant, I wonder the way these stocks have run, whether in the unlisted space, NSE is going to see more demand. You don't know when it's going to get listed, but maybe if you have a longer time horizon with the way these stocks are trading, the kind of valuations that they're trading up, the street is penciling in very, very good times for them. And the entire industry will have to do well. So let's see how that goes.
I was talking to a large investor in BSE the other day, and he was saying, I heard something completely. So the general thing is, when NSE lists, whenever that is, and I think in the unlisted is trading at about 3,200 or something, it'll see a big move up because these much smaller players have done so well. So the gentleman was telling me that actually that will happen because NSE, of course, will not list at 3,200; it'll list much higher
whenever it has to.
But BSE is the one to watch out for in that case, because then it'll track what NSE is doing, and he believes that BSE is still extremely undervalued relative to where. Of course, it all depends on how much share BSE will have when NSE lists, etc. Will they be able to get to 20%, 25% of the market? That'll be very interesting to watch out for.
Yeah. Well, all right, let's wind down the markets. Then a few stocks that did well, particularly in the end of trade. If we pull up some intraday charts, Z Media, suddenly the stock took up. It's up close to around 15%. Remember, some of these stocks have not been big value creators in the last few years, but the last half an hour or so, Alok Industries, Z Media, Dish TV, all of them did see a big spike, and volumes as well were very, very good. So these stocks, they go home with big gains. You had India Cements as well. The street again is buzzing with excitement that maybe something's got to give out here. So that stock as well goes home with big gains. And IRB Infra, well, that one went home with solid gains in today's trading session. These are some of the top volume traded stocks in trade today. On the flip side, sugar got smacked. Bajaj Hindustan, Sri Lanka Industries, Balrampur Chini, BHEL as well pulled back towards the end, so that stock as well ended with a cut of around 4%. Rima.
It's been a remarkable week for our markets. The Nifty today conquered the 21,000 level. The high today was 21,006. We're ending about 25, 26 points off from the session high. but firmly in the green with a gain of about 0.4% for the benchmark indices. For the week, the Nifty's rallied close to about 3.5%. Some of the triggers for the day include a balanced RBI policy, pro-growth, the Reserve Bank of India raising the inflation target to 7%, the growth target, the GDP target to 7%, while keeping the inflation target unchanged, and the SIP inflows continue into the Indian markets unabated, $2 billion for the month gone by. The mid-cap index, though, ends mildly in the red. Adani Group stocks corrected. Adani Enterprises ports under pressure. On the gaining side, large-cap private banks continue to march on. And today, IT names like HCL Tech, LTI Mindtree gave it company.
The one reason why the Nifty did very well this week was HDFC Bank, which is 15% of the index that hasn't participated. For this week, it's up 6.5%. It's had its best week in the last 1 year or so. Hormuz has, communicated that to me. So it's been a very, very good bounce back. HDFC Bank finding its form. And that's one of the key reasons why the Nifty ended higher. Pull up a week-to-day chart. That will tell you the real picture.
Well, that's absolutely the case, doing very well. So it's a fantastic week that we are wrapping up. And I think as we go into the weekend, one can only hope that all of you have a very restful weekend and come back not for battle, but for maybe higher markets next week as well. Well, but stay with us for now. On the other side, our special show, Smart Money, will pick up on all the action in just a bit from now.